Patron, take them away.
Okay guys, hope you're well. We're going to be looking at a couple of charts today. It's one that I did an analysis yesterday for the squad, which is the Dow. I'm not a lover of the Dow. I find it dangerous, and I'll definitely be treating it with kid gloves today. And the other one is Euro JPY. Now, we're going to kind of just have a quick look at these. Clear this off. This is Wall Street. As you see, it's now starting to push up, bouncing off this level. If I drop this down into 5-minute chart, 1 2 3 4 5, well, there's no point doing a candle count because it's stretching away. Now, I should have bought this a little bit earlier on, to be honest. Yeah, right. So what I'm going to do is I'm going to let this come down a little bit. If it breaches that, I'll look to enter to get in. But I'd like to see it come down. Actually, yeah, I'd like to see it come down a little bit. So that's what I'm going to do. I'm going to kind of wait for it to come down slightly. So keep half an eye on that. But one that I'm looking at is this. All right. It's a one that I was saying, right, it's cracked through there, so it's ready to put a sell order in. So I'm going to put a sell order in. So just bear with me. I'm just going to drop it under there, just like so. Okay. Right, let me explain this. Basically, this is something that I showed you at the weekend. Key levels that are in place. Key fibs, we can drop some extra fibs in because we're going to base this off the hourly chart. So we've got key fibs there. We have a blue line there. I'm going to sell every single one of them. And if I drop a moving average into this, so I'll just grab a moving average, put a 200 on it. It's below it. So as long as it's below that, I'm selling each one of these levels. Now the caveat here is knowing how to do this. Now if you take this out to the higher time frames, what we'll see here is, and this is where moving averages fall down somewhat because they can conflict with each other. You can go, oh, what's above the moving average, therefore I need to buy it. Not quite. What you can see though is it's quite far away and it's coming back. If you're using moving averages to sort of trade with, they need to be encompassing to the time frame that you're working with. So I use what's called a +1, -1 scenario. So I'll start with an anchor point, which is here. We are below it. Go +1. We are below it. And then I'll go -1. We are below it. 3 time frames in and around what I'm trading with are all confirming. So as far as I'm concerned, I'm selling this thing. And that's a simple way of doing it. You know, it's about as simple a way of using a moving average as a barometer as you can get. And then if you've got your key levels marked in, if you know how to mark them in, fantastic. They're all just solid swings of the market, coupled with high time frame fibs. Very, very simple. If you're stuck, come in the Discord. I'll show you exactly how to do it. And away you go. Dead simple. Now, this, I already told the guys what I'm doing. If I just pull this down, you'll kind of see it in my markups. So I'll just put this here. That is that. Just switch that off. Marked it all up for them, showing them what's going on. Above it is the strength sheet, which tells them which markets we're going to be looking at. So it's up there, Euro, JPY. Now, as we go through this, the Dow I did yesterday, which is what we're going to be looking at as well. Okay, so the guys know exactly what we're looking for. And sure enough, there it is, coming in right now as we speak. So we're going to let that one play out. I'm going to be watching the Dow as well, which is this one. Again, like I say, I'm going to let this come back on itself. If I don't get into this, I'm not that worried because it's a dangerous market. But I made a clear idea of what I was looking at. And I prefer to trade one asset at a time. And this one happens to be for me. So we're going to do this, try and get 100 quid out of it, something like that. And then just do that once or twice a day and you'll be fine. Right, catch you all in a bit. Okay guys, that's done. You may have to excuse the banging in the house, knocking the living shit out of it, getting new carpets, etc. But this has done pretty much what I wanted it to do. Down into level, broke level, got into midpoint, came back, hit the trailing stop, game over. So there's no tickets left now, and we've done 88 quid for, let's see, it's 5 to 11, a couple of hours work. So I can live with that. So what's the moral of the story here? The moral of the story is very simple. And that is, keep it simple. The simpler your trades are, the better they become. Kind of flick this back just a second, because I was looking at Wall Street as well. And as we can see here, if I pull this back to the hour, it's pulled back into levels what I want, but it's not showing signs to the upper side just yet. So again, it's a simple process of waiting. Waiting is the key here. You know, I can wait for this to come right the way down there to go back up. And if I don't need to trade it, I don't have to. Simple decision. One of the biggest problems is the desire to get into trade and look for the holy grails, etc. Firstly, the holy grail doesn't exist. It never has, never will. And if you think it does, well, you're destined to fail. If you think the old ways are just old and you're looking for the new latest thing, again, you're going to fail because there's nothing different in what we do. Goes up, goes down, goes nowhere. It's always been the same. Support and resistance lines will always be a constant. I was questioned as to why price is a constant the other day, and it said no, price isn't a constant, it's a variable. It's not. And I'll tell you for why it's not a variable. If you look at a monthly chart and you look at a tick chart and you looked at the price at the same time, they're in exactly the same place. It is a constant through the time frames. It's not variable. Your levels are not variable. They'll be the same on a monthly as they are on a tick chart. They are constant through. But if you looked at an indicator, they're variable. Because an RSI on a monthly is completely different to an RSI on a 5-minute chart. Constants and variables. Keep things simple. Understand the principles of what you're looking at. Look for the average across multiple time frames. And then the odds are in your favor. I can't get it any simpler than that. You know, pick a market, make a choice, whether it's up or down. Look for the boundaries, lock it in, and then trade to those boundaries. That's trading in a nutshell. It's as simple as I can possibly make it. But then again, I'm told I'm wrong every day. And I'm told the old ways are no good every day. But I'm here every day. I call it publicly before I trade it. And I've got a huge hit rate. I'm running at 87% at this moment in time. Why? I do my homework and I know what works. Can you say the same? So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.